Hello viewers, welcome back to my channel. In this session we are going to discuss about what are the conditions for claiming input tax credit under GST. In the previous session we have already discussed about what is input tax credit in detail along with examples. So if you are new to my channel and you have not watched the previous videos yet, I will provide the link in the description box below, or at the end of this video. Do check it out first. Now let us one by one discuss the conditions for availing the input tax credit under GST. So the first condition is must be registered under GST. A person cannot claim for input tax credit if he is not registered under GST. So, registration is compulsory for claiming input tax credit. And if a person is registered under GST, but if he is a composite dealer, means who is enjoying the benefits of composition scheme, cannot claim for ITC. So, in short, a person must be registered under GST and he must not be composite dealer. The second condition is goods should be sold and not used for personal purpose. Here it means the dealer has to sell the product on which he wants to claim ITC. If he used those products for his personal purpose, then ITC cannot be claimed because then he becomes the final consumer. And GST is consumption based tax. So ultimately the final consumer has the burden of payment of full taxes. The third condition is possessing a debit note or a tax invoice. So basically the dealer who wants to claim for ITC must have the debit note or the tax invoice for the goods purchased by him. A debit note contains all the details from where and at what cost the goods have been purchased. So it serves as a proof that the dealer has already paid the tax while purchasing the products and he can easily claim ITC. So without any documentary evidence, ITC cannot be claimed. Next condition is possession of goods must be transferred. Here it means that the ownership of the goods must be completely transferred from the seller to the buyer. Only then the seller can claim for ITC. For example, a company is selling a car to the customer. If the customer makes the full payment and takes the car with him, the company can claim for ITC. But if a company is selling the car on installment basis, in that case, even if the possession of the goods is transferred, but the ownership will be transferred only when the last installment is paid by the buyer. So, until the payment of last installment, the company cannot claim for ITC. Next condition is that GST must be deposited with the government. Here, suppose you are purchasing any product from a seller and paying tax for it. Now, you are selling that same product to others, but if the seller from whom you have purchased the goods has not deposited the tax amount which is paid by you with the government, then you cannot claim ITC, even if you sell that product to others. So basically, ITC cannot be claimed until the previous seller has paid the tax to the government. Next condition that we have is filing timely GST returns. It is very necessary to file all the GST returns time to time with the government. It is not only essential for claiming ITC, but all other benefits of GST can also be enjoyed. And also the returns that are filed must be accurate. ITC cannot be claimed if there is an error or wrong returns are filed. Next we have ITC on fixed assets. Here it's an important point to remember that ITC cannot be claimed on fixed assets if they are used for personal purpose or if the depreciation is charged on it. If the depreciation is not charged and they are further sold to others, then ITC can be claimed. At last, let's have a look at the documents required for claiming ITC. First, tax invoice, debit note and credit note. As already explained in conditions, a person must possess these documents which serves as a proof that the transaction has been carried on. Next, we need a bill of entry. Bill of entry will be required if the goods are imported from other country. So, an importer issue an bill of entry which contains all the details of the goods sent and amount paid. Next, it's necessary to have a copy of GSTR form filed by us because GSTR2 forms are used by government to check with the sellers. Lastly, we should have a copy of GSTR 9 forms filed by us. In GSTR 9 forms, details of outward supplies, inward supplies, GST payable, ITC claimed for previous financial year, all these details will be mentioned. So basically all the above mentioned documents serves as an evidence for the transactions made between the business. So if all the conditions are fulfilled and if all the documents are available, ITC can be claimed easily. Okay guys, so this was all about today. If you found it helpful, please hit the like button. Also subscribe to the channel. You can ask any doubts in the comment section below. Thanks for watching.